good evening everyone. Very warm, very humid Singapore humidity. Welcome to today's episode of the SFF Green Shoot series. My name is Gabriel. I am your host for today's session. Just a little bit of background for everybody. We're just going to do a very quick recap. Green Shoot series started last year, actually in 2020. It was built as a place for online discussions to share practical insights, authentic stories. Basically, we bring thought leaders, bring experts into the space, focusing on key issues and topics in the fintech industry. Not just talking about today, but about tomorrow as well. And today, we have a very, very special session because we're coming live from Bridge Plus. We're also coming to you live, as you can see, with an invited live audience, which is here for the first time, right? So just hello everyone, right? Take some, pictures, IG stories, Snapchats, TikToks. Don't think any of us use TikToks. And it's really, really glad to see everybody in real life. It's really, really been a while, and we're very, very glad you can join us. So we've got a captivating hour or so ahead of us, and this is actually going to be a part of a 4-series team where we'll be talking about digital currencies, right? These series of 4 sessions will be happening over the next couple of months or so, right? These sessions are hosted in partnership with our BIS Innovation Hub right here in Singapore, actually conveniently located in Bridge Plus as well, as we're going to go on this journey of exploring various aspects of digital currencies. Green Shoot series is also proudly supported by Temasek, and this venue is of course courtesy of Bridge Plus. For all this support, all right, the team of SFF Green Shoots, we give you our deepest thanks. Now talking about digital currencies, I think last year, digital currencies, or I think the lingo for it, CBDCs, they were all the hype, right? There was a lot of buzz about it. There were discussions about how, innovative, it's like what potential is it? Just as a simple example, what kind of, how can it make payments more seamless in the world, right? In fact, I think it was also one of the key discussions that happened at the Singapore FinTech Festival, SFF, last year in December. Fast forward now, we're in June. Where are we at, right? And that's kind of like the purpose of what we will be discussing again forward, moving ahead. We're going to have 2 key topics, right, that we're going to be breaking up this hour into. First, more or less half an hour, we'll be talking about digital currency adoption, right? So last year we talked about hype, potential, right? Not this year, I think 6 months on, where does adoption lie? How far away from it? Where are we at and everything? Second topic we'll be discussing a lot about today is CBDCs for public good. I think that's a topic that's key, or rather say very close to the heart of a lot of the speakers and panelists on the second session as well, right? By the way, for all of you watching online, greetings as well. Both of these sessions, if you're seeing it on Zoom, will be open to online Q&A. There's a Q&A button at the bottom. Just click it. You can send in your questions via Zoom as well, right? And now, without further ado, I think you've got a little bit enough for me, to introduce the first panel in detail, as well to share a little bit more. We'll basically be inviting Wiki, who is the advisor to BIS Innovation Hub Singapore, and he'll be introducing the rest of the panels and context for the first topic. Wiki, thank you. Panelists, please.
Come on, put your hands up, put your hands up, put your hands up, put your hands up. Let's go!
Thanks, Gabriel. Thank you very much to the audience as well. It's been a long time since we actually heard applause in like doing a webinar or a panel discussion. So it's really nice to be here at the venue today. I just want to share that, for those of us on the panel, it doesn't seem very long ago that we sat in a room in level 11 of the MAS building, talking about Project Ubin, talking about blockchain experimentation being the key word. And here we are today talking about commercialization and live adoption. Vinay, Naveen, and Laura, very happy to have all of you here today. Now, before we start the discussion, I would like to share one frame of how we like to think about digital currencies. The way which I think of it is really a 2x2 matrix, whether it's issued by a commercial bank or whether it's issued by a central bank, which is usually what we call a CBDC. The other perspective is whether it's a single currency platform or whether it's a multi-currency platform. At the lower right-hand corner, we have the Bahamas Sand Dollars, one of the first live CBDC projects in the world. Vinay is the COO of NZIA, the technology partner that implemented the Sand Dollar. So thanks, Vinay, for joining us today. To the left, we have JP Morgan Coin, a digital coin that facilitates real-time value movement, allowing its customers to transact around the clock. Naveen is the global head of coin systems at Onyx by JP Morgan and a longtime partner of Project Ubin. Moving up a quadrant, we have Patio, a joint venture by Temasek, DBS, and JP Morgan on a blockchain-based multi-currency payments platform. Laura is a director at Temasek and have been working tirelessly bringing this joint venture together. So this is really how we see this panel coming together today. And of course, in the final quadrant, a vision that we are really working towards, a shared platform by central banks for international settlements using multi-CBDCs. It's still a project in the works, still very much in experimental phase. So let us focus instead on our three speakers we have here with us today and learn from their experience of moving beyond experimentation to live adoption. So Vinay, I'll start with you for the very first question. Central banks have been experimenting with CBDCs for many years, yet only a small handful has gone live. How has the Sand Dollar implementation been, and what were the key challenges you faced?
Sure, thanks, Vicky, and good evening, everyone. Nice to see you all. We've been incredibly fortunate to be among the first in the world to both trial and take a retail token-based CBDC to production. And for context, the Sand Dollar, which went live on October of last year, is the digitized version of the Bahamian dollar, which is the sovereign currency of the Republic of the Bahamas. It's the singular challenge that we faced, and there's obviously lots of challenges that come with any technical implementation at this scale, but the singular challenge we faced was this hadn't been done before. There was no playbook. They were completely in uncharted waters. So we were making big decisions on behalf of the people of a nation and building long-term infrastructure without any sort of precedent as far as legality, regulation, policy, technology design, all these things were concerned. So we were completely in open waters, had to work with a very wide range of stakeholders to try and understand what sort of choices need to be made, had to understand what needs to be done in a country that has not just difficulties with fintech infrastructure, but also physical infrastructure. Imagine a nation slightly south of the coast of Miami, which is broken up into 700 islands and keys in the middle of a hurricane zone, where electrification, availability of Wi-Fi data, these are all real problems there. So how do you implement something which is supposed to be real-time, online, national infrastructure, secured by sovereign policy, when you have a hurricane that can come out and take out half the country at very short notice? So we had a whole slew of challenges to obviously take care of. But we've been fortunate that most of the moves we've made have put the Bahamas on a trajectory that seems to be working quite well. We see a lot of literature and surveys coming out of the BIS, and we take those as sort of milestones and try and see how we've done so far. And so far, so good. We're on a pathway to increasing adoption and building up from here.
Okay. Thanks, Vinay. And moving on to Naveen, do you face similar challenges with bringing JP Morgan Coin live? I suppose you don't really get the hurricanes and everything, but I guess the whole experience might have felt similar to that also.
No, we get the figurative hurricanes as well. And the challenges continue through the day, right? It's not that the challenges are done. To just borrow from what Vinay said, to pick up on the fact that there is no existing playbook. And culturally as well, for JP Morgan, this has been a huge departure. I mean, for doing something of this sort, launching JPM Coin, which is the first in the industry, that's not what we usually do. We are quite conservative in terms of the financial products that we launch. So for us, the challenges was twofold. One was explaining what it's not, right? So this is about educating and explaining to our stakeholders, our regulators, this is not a crypto, this is not a stable coin, it's actually a deposit, but on blockchain. And then the question is, okay, if it's a deposit, then why do you need it, right? I mean, so then you explain what is it, the problems that you're looking to solve. So one was this entire thing on what it is not, given that there is so much haziness around this whole space. And then the second bit is about getting our organization comfortable on what it is. So this is about, we are actually externalizing our core banking system. You're externalizing our ledger on a shared platform. That is a big deal for a bank. It's about putting books and records on public infrastructure and getting them comfortable with the fact that this needs consensus. Again, why do you need consensus on essentially our ledger? Why do you need other validators? It's about answering questions around, like, we talk about programmability, we talk about smart contracts, we talk about mutual validation. And the questions are around, like, where does the liability lie? It's great to allow our corporate clients to define rules and allow mutual validations, but when things fail, who bears the liability? So it is around getting our organization comfortable with some of these constructs that most of our challenges has been. The challenges on technical side have been considerable as well in terms of how we implement, let's say, privacy on a shared ledger. How do you comply with privacy laws? How do you comply with things like, bankruptcy holds? All of those things which go with a deposit product, how do you build? But the challenges by far have been, as I said, more on the legal, regulatory, cyber side of things.
Yeah. And Laura, so you are responsible for bringing the Patio joint venture together. What does it take to bring banks together on building a shared platform?
Okay, thanks, Vicky and everyone, and good evening. Well, first of all, I think everybody here recognizes that new digital technologies, as well as increased online activity, has brought about the lowering of costs for multiple tasks and activities out there. And this has also resulted, in hyper, scalable applications coming in and disrupting in industries. We've also seen new players coming in as well to participate in the new digital economy, right? Providing new services, as well as providing, and filling up the gaps that, it's demanded by consumers. So the financial industry as well is not immune from this technological revolution. Actually, we've seen a lot of innovation in this space, coming from multiple players such as crypto, stablecoins, even last-mile fintechs and messaging solutions, all coming together trying to solve the payments problems. Now, how does Patio differentiate from the rest of the industry solutions that's out there? Aside from us trying to tackle the wholesale correspondent banking problem, which everyone knows here is fraught with inefficiencies as well as high costs, what we also aim to do is not just focus on the inefficiencies of costs, but how do we actually enable net new capabilities? How do we bring in new business models, new paradigm shifts? How do we enable things like, PVP, DVP, or FX intraday swaps, which currently the existing systems and infrastructure today are unable to support? So that would be one of the key things I think that's important for banks to see that there's utility, that it brings value to them and to their customers. That's one. And secondly, we also leverage on the franchises of Temasek, JP Morgan, as well as the DBS, our partners, to bring together the ecosystem and collaborators. Now, we all recognize that, to build this infrastructure, it's all about network effect. The three of us together won't be able to do it, right? So how do we actually manage to get, stakeholders, such as, industry participants and customers, as well as regulators comfortable with us? So that was really key.
Thanks, Laura. So today, what we really want to get down into is this whole idea of digital currency adoption. And it's good that you guys are on stage here with us because you actually have projects that are live or are going live. So we want to drill down into what are the differences that help you go live when many others have not? Or conversely, why are we not seeing more of such live projects happening today? Maybe we could just go around the table. Yeah.
Sure. Having looked at Patio for more than a year, right, or 2 years, almost 2 years, I can say it's really hard. It's really hard to, build new infrastructure, build new models, especially one that's a critical financial market infrastructure, right? Like I've mentioned, it's an education process, and I think Vinay as well as Naveen has also said, right? It's not just an education process to other people. It's also an education process within our own organizations, aligning the thought process, of key stakeholders, of fintechs, of banks, and regulators. And not only that, not only it being an education process, in the same time, we do have to run, multiple work streams, right? We have to think about entity setup. We have to think of the nitty-gritty of, hiring. How do we get adoption? What should the product design and the platform design look like? How do we get feedback and, a broader engagement of ecosystem participants to ensure that we're not building in isolation, right? And to ensure that the product and the solutions that we deliver would be something that consumers want, right? Our end customers want, and not something that we think that they want. So it is a journey, and it's not something that can be built overnight. So I think, having spent almost 2 years on it, I can see there's a lot of white hair on my head right now, although I've tried to cover it with some dye, but it's not easy, right? And a lot of respect. I take my hat off, to people out there who are trying to be contrarians. I take, a lot of respect to entrepreneurs out there who are trying to build businesses, because it's not easy, right? And it takes, a whole village, to bring this thing to fruition.
I mean, just to add to what Laura already stated very eloquently is that, we see with most of our competition that, we'll take a wait and watch approach, right? I mean, this is hard work. This is hard work. There's a lot of haziness. There's a lot of lack of regulatory clarity around this. Market infrastructure projects are hard. How do I prioritize joining a new market infrastructure based on digital currency versus joining a real-time payment rail, which is much more proven? So, a lot of people are taking a wait and watch approach, and that's why it's been hard. And connecting to these rails would mean a fundamentally different mindset, as I said. This whole notion of getting comfortable with externalizing ledgers, hosting nodes, participating in consensus for updates to my ledger. And the benefits case for this will only be proven once there is traction throughout the industry. So you have these high barriers, and then you have these benefits which out there are not yet proven, and that's the reason why you see lack of speed, in my view.
So a major learning that we took away from Sand Dollar was that there is no one thing, or in our view, there shouldn't be one thing called a CBDC. Just like how I don't believe there is one global financial system. It's a fragmented, unique, highly sovereign-specific aspect that each country has to relate to. So to see this as a coming-of-age problem where all central banks have to somehow march towards the goal of issuing a CBDC, I think is slightly flawed. We need to take a wait and watch approach. The fundamental philosophy that money is a public good, right? That's a huge mind shift. And for a central bank to take along all of its stakeholders to essentially ensure there's no or minimal disintermediation or changes to legacy infrastructure that's been built on decades is a big step forward. So it's actually not a bad thing if central banks are taking a wait and watch approach. Because as much as we might say that, yes, we're piloting this or piloting something else, these are not projects you can fail on. These are commitments, they're on a public record, and you have to see them through.
Okay. Thanks, Vinay. Also for bringing up the topic of CBDCs, money as a public good. That's actually the discussion, the topic for the later Fireside Chat. So we'll leave it to Sopnendu, Paula, and Andrew to really dive deep into that. Now, I just want to pick up on one of the points which Laura mentioned about education. When we try to find information about digital currencies online today, usually the literature always focus on CBDCs. But Laura and Naveen, between JP Morgan Coin and Patio, you guys have actually taken the route of transacting on commercial bank money on the liability of JP Morgan, on the liability of DBS Bank, for example. Could you explain to us the differences between, say, commercial bank money and CBDCs? And really, from your perspective, what's the rationale of transacting on commercial bank money? Do we still get the same benefits as transacting on CBDCs?
Yeah, so maybe I can take that question. I feel quite strongly about it. I mean, people miss the point a lot of times, I feel, right? You talk about crypto, you talk about stablecoin, and then you jump to CBDCs, right? Hey, today, a large part of payments is disproportionately facilitated by commercial bank money. So if you believe that CBDCs make sense, then by extension, commercial bank digital currency should make 10 times as much sense, because typically the ratio of M0, M1 is 1:10. So as we move forward to the world of digital currencies, do we think that that mix is going to change? I don't think so. Do we think, are we going to fundamentally, change the market structure and disrupt credit allocation? I don't think so. So to that extent, I think that commercial bank digital currencies are even more relevant on the wholesale payment side compared to central bank digital currencies. The problems that we are looking to solve are very similar. How do we remove friction in cross-border payments, right? In terms of how do we stand up new infrastructure so that there are no differing operating hours, lack of unifying standards. How do we make atomic settlements? All of that is not a function of whether it's a central bank money or commercial bank money. That's a function of the infrastructure which you operate in. If you think about the second use case we're solving for, as Laura said, FX payment versus payment, FX settlement risk is on the rise, and CLS has come out and said that that's the case, because increasingly you see trade on emerging market currencies. CLS themselves talk about alternate settlement venues where you can take out the risk. Again, that's something that commercial bank money can solve, enabling PVP transactions. Yes, there is credit risk with commercial bank money, which is not there in central bank money, but you take out settlement risk. You can solve for DVP with commercial bank money as well. So a lot of the use cases, that need solving for, it's not about having new forms of money, it's about having new infrastructure. And that's what we are looking to solve with Partier.
Okay. So this is getting to be a very interesting conversations about commercial bank money versus central bank money. So I have two questions. First, going to Vinay. Are there benefits that are true only to CBDCs? And the next one goes to Laura. Do you see CBDCs as a competitor to Partier's offering, to what you guys are doing with commercial bank money? Maybe Vinay, you go first. Are there benefits that are true only to CBDCs?
Oh, that's a tough one, because to say that it's true only to CBDCs is a tough one to answer, because we're quite early in the game. But I will say this: if you envision CBDC as not just tokenized money, or not just saying here's a tokenized version of the national dollar, but this sophisticated value chain of players across the ecosystem, bringing together authorized FIs, bringing together everyday people, and the education process required to lift the profile of adoption, teaching people who are unbanked how to use their private keys. Now imagine that sort of learning curve that a central bank has to go through. So if you think about CBDC in that sophisticated fashion, I would say there are two areas, and for two totally different kinds of economies. First, you have the emergent island economies, the developing, underdeveloped economies, where it's quite expensive to be poor. If I can use that often used phrase, it's really hard for people to get out of that vicious cycle. CBDC provides much needed national infrastructure to leapfrog a lot of payment systems, to open up opportunities for people at the bottom of the pyramid, which they would never have otherwise, which would take much, much longer. And we saw this with Bakong in Cambodia. We're seeing this with Sandollar now. We're seeing with a number of other economies. And then you come to the more advanced side of the spectrum. You talk about countries like the UK or Singapore, highly mature retail payment systems. And to Laura's point, I think we are starting to see with CBDCs, which is technically in the world of emergent crypto and alternate assets, CBDC could be construed as the most stable of all the stable coins, especially if you link it with the reserve currency. And then suddenly you're looking at a whole new grade of enterprises being developed, all sorts of new business opportunities, things that we haven't even thought about before. I mean, who knew that we would be here discussing tokenized artwork in the millions, and that could spin off a whole new kind of business ecosystem. So I think that sort of excitement is what CBDC brings to the more developed regions. And I'll just stop by saying this. I used to be in the blockchain space, and in 2019 BC, or before COVID, when crypto and blockchain was the rage, there's a gentleman who's in the audience over here, as a senior person, I won't name him. He pulled me aside and said, listen, you crypto guys, you think you're very clever, doing all these fancy things with your stable coins and crypto. The institutions are catching up, and we're going to learn from you, and we're going to take the best of what you guys have developed, and we're going to make it better. And that, I think, is a coming-of-age story for CBDC in advanced economies, that central banks are back in the game, and they have something big in their hands.
Thanks, Vinay. So I think that's again really interesting. I guess it's really a whole catch-up. So that ties in very nicely to a question which I wanted to ask Laura. Do you see CBDCs as a competitor to Patio's offering? Do you see that maybe central banks will start catching up and really do a lot of the cool things which you guys are doing now?
Not at all, in fact, Vicky. I think that CBDCs are complementary to Patio's offering. Patio is an infrastructure that can support, either M1 or M0 money, right? From that perspective. In fact, I think that, what is relevant that, recently when we've gone through the COVID pandemic, and we've seen that, some countries and governments trying to get aid to the most vulnerable because they do not have the right infrastructure to reach these people. There has been quite a bit of problem, So with CBDCs, I think, you can issue them on right infrastructures, proper infrastructures to ensure things like, your food stamps, your child benefits, your tax refunds reach directly to people. And I think new infrastructure is needed to be able to enable that, right? I mean, even in Singapore itself, we did see in the newspapers that, when the government tried to get NTUC vouchers through the mail to people, some of these vouchers were pilferated, they were looted, and stolen, right? And that's a shame, that's a crying shame, right? With CBDC, we think that, once you get it directly to the customer's wallet, that is a whole new value proposition there. Now, but of course, to Vinay's point, how do you make it easy to use? How do you make it accessible? And what are the goals that you will have in mind, for CBDCs, right? These are all the important considerations that need to be thought about in order to see adoption as well. So yeah, a short answer to that is like no. In fact, we think that CBDCs can build on top of Patio.
No, I just like to add, will be built on top of Patio, right? It's not M1 or M0, it's M1 and M0.
Exactly, yeah. We do see the multiple forms of digital currencies coexisting, and because they address different use cases, right? All of them, either being a store of value or medium of exchange or unit of account. I think, it would be up to the consumers to choose, which digital currencies they think are most applicable to particular use cases.
Thank you. So, looking at the history of where we have been through for the past couple of years, we see that there's an evolution of thinking and focus about CBDCs in the ecosystem, in the central banking world. 2016, when we first started looking at this, we were talking a lot about wholesale CBDCs, cross-border payments. Retail CBDC is gaining a lot of prominence in the last year. The new flavor of the month is multi-CBDCs, a recently coined term, and many central banks are now exploring in that direction. Now, just sharing from a BIS Innovation Hub perspective, we do see that if we can build a common settlement platform where multiple multiple central banks can come together, issue their CBDCs directly on this platform, of which these commercial banks are directly connected, all these commercial banks will be able to transact directly with each other in these different CBDCs. We are going to solve a lot of the problems related to, correspondent banking. We are going to allow direct transactions. Payments is going to be a lot more seamless. But there is this concept of shared platform. How easy is it to actually bring central banks together on a shared platform? That's one of the big focus areas we've been looking at. So I just want to go back to Naveen and Laura again. Patio takes a very similar design. You look at multiple commercial banks coming together. Essentially, what you are building is a shared platform for banks. Have there been challenges on the governance front, and how have you resolved it?
Yeah, so, and again, as I said sometime earlier, Vicky, the challenges are continuing as we design and we are in the process of build out. But the concept is very similar to MCBDC, shared ledger platforms. What you need to solve for are when banks come onto a shared ledger platform, and which is driven by consensus, who gets to participate in the consensus? Who gets to be part of the transaction? How do you solve for privacy on a shared ledger platform? How do you comply with Banking Secrecy Act? These are some of the questions, design questions that we've spent a lot of time thinking through it. And how does this whole notion of an operator, a system operator, a payment system operator work in a network which is completely decentralized? And the design choices that we made means that each of the banks are participating almost in a peer-to-peer fashion in terms of how they communicate with the settlement banks. So it's completely decentralized. So the question is, do you need a traditional construct of a payment system operator? What sort of governance do you put in place for a network of this sort? So again, not to give away too much of the secret sauce, but these are some of the design considerations that we are grappling with, and I believe that we managed to solve some of this, which is why, we keep pitching to you and Andrew that, MCBDC kind of platform should be built on top of, Partner. So, anyway.
I'm glad you're doing the selling for me. Well, I think, Vicky, the way we also think about it is Temasek is in a very unique position, right? Given that we are not a bank, we do not have conflicting interests. So what we try to do, or what we aim to do, is we engage with market participants, we engage with regulators, we engage with various stakeholders, and we try to get feedback from them early on, right, to see what works and what doesn't work. Taking into consideration that, of course, there needs to be equitable economic distribution, right, for participants to want to come on board, aside from providing them utility as well. So I think that's where we play a very neutral role, and we become the trusted partner for a lot of banks as well as financial institutions who come and engage with us, to make sure that we do also look out for their interests as well. So I think from that standpoint, that's how we think about catalyzing this ecosystem, because like I've mentioned again, it takes a village to build this platform. We can't build in isolation. No one has a monopoly on the best ideas. If you crowdsource ideas to folks, you get all the best solutions because you have all the best brains working on this problem.
And Vinay, now I want you to help us keep the two of them honest over here. So among all of us, you are the only one who have implemented a live CBDC project. Do you think that what they have said, about a multi-digital currency platform, do you think that will work with CBDCs? Is a multi-CBDC solution viable? Or do you think that complexities with central banks are on a whole new level altogether?
I mean, to be honest, it's too early to tell. And for all the reasons that we've all discussed today, this is a very new space. It's moving really fast. There's nuances that a lot of central banks are still grappling with, trying to understand. So to say that these proposals are a straight fit would be difficult. But then again, this is Singapore. This is hallowed ground as far as CBDC is concerned, and this is the home of Ubin, and a lot of good things have happened from here. So I think the countries in the CARICOM region, I can't speak for the central banks obviously, but places like Africa, Latin America and Caribbean, where a lot of CBDC activity is happening, they're all looking quite keenly to this part of the world to try and see what they can leverage. So absolutely, there's tremendous promise with what's happening out of here. And MCBDC is definitely something that, once the domestic complement for cash or retail CBDC matures in these countries, that's the next step, and that's the next logical step forward.
So I'm going to move on to some audience questions. So if any of you have any questions, from the live audience over here, just raise your hand and let us know. So I'll just get the first question. Do you think that CBDCs will replace the current cryptocurrency market? Or do you think that the two will live in symbiosis? I guess when you talk about cryptocurrency, we are talking about both Bitcoins as well as like stable coins, etc. Yeah.
I can go first. So no, there's no evidence to suggest that one will sort of supersede the other. So far, nothing's happened. We in fact have a lot of ideas and a lot of opportunities in places like the Bahamas and other Caribbean countries that are trialing CBDC, because now you have the rails for a T+0 or T+0 settlement system. So making things like access to digital assets that are not fiat in nature is opening up a lot of opportunity there. So no, there's no evidence to say that one will replace the other. I think we're heading to a world where to say that they will exist in symbiosis is a bit of a stretch, but I think we're heading to a world where optionality is going to be key. People are finding new ways to perceive value. I mean, 20 years ago, gold was probably value. Then digital gold became value. Today, tokenized artwork is value. So the optionality and the spectrum to perceive what we as individuals consider value and wealth is widening. And I think CBDC will be an important ingredient in that spectrum.
I'd probably add to that a little bit why, especially on stable coins, I think recently DM came out and said that stable coins will be sort of a bridge solution till CBDCs, fully take off. And I agree with that completely. My view is that when CBDCs are largely adopted and proliferated, the business case for stable coins goes away. Having looked at it as a bank, again, we look at things all of the time and the economics of it. I simply think that economics won't work for privately issued stable coins once CBDCs take off. But just to add on to what Vinay said.
Yeah, I think for me, and I've mentioned earlier on as well, it really depends on the utilities or the use cases, right? So cryptocurrencies like Bitcoin has emerged as more as a store of value rather than as a medium of exchange, right? Because it swings so wildly, right? It's quite hard to be using it as a medium of exchange. But people have likened Bitcoin to digital gold, and there's enough momentum and investors' money going into that segment of assets, right? CBDCs, on the other hand, and stablecoins are trying to solve other problems, right? But again, and like I say, the design and the ultimate, vision, what are they trying to solve for becomes very important, right? Of course, CBDC being issued by a trusted, the central bank, has a high probability of, getting mainstream adoption because it's trusted, vis-a-vis other forms of coins that's being issued out there. But again, the last problem, or the most important problem that they need to answer is, what is the objective of the CBDC? What's it going to be used for? What problems are they trying to solve out there? Is it for financial inclusion? If it's for financial inclusion, then how do we get around KYC and all other sorts of a whole host of problems out there, right?
Yeah, thanks. And I think I'll really summarize the answer to it really depends on the use case. And I guess that happens with a lot of these questions as well. It's really about the specific use case we have in mind. So I have a question that's specific for Naveen on JP Morgan Coin. What are the benefits of externalizing the ledger for deposits for a commercial bank like JP Morgan?
So the benefits lie in not just externalizing the deposit, but what comes along with it. So the whole idea is to introduce things like programmability. What does programmability mean, right? And that's the holy grail. Everybody talks about programmability, but programmability is about giving our end users, our corporate users, the ability to compose triggers on how their payments move, triggers on mutual validation. At the simplest level, right? You have basically a buyer and a supplier. How do you trigger payments based on mutual validation that an event has occurred? Those are the sort of things that we want to enable by externalizing JPM Coin. And financial services has been very destination-based, right? You come to us, whether it is through API or channels, you come to us. Our view of externalizing JPM Coin is we will embed the bank as it stands into your world, into the corporate's world through a node. And this is not just about the account, but everything else which comes with the account, all of the capabilities, so that you can natively embed banking as part of an end-to-end business process. So yeah, I mean, we are stretched for time. I'll not go beyond that, but that's a quick answer.
Yeah, I think some of these questions, probably we should do a master class to really deep dive into it. So I got another question over here. If banks are connected via a common, shared digital currency platform, how will cross-currency exchange take place? From a FX perspective, how do you foresee it happening?
I can take that. Yeah. So again, we don't think that market making will fundamentally change. The front-end process of RFQs and how you take out quotes and how you book FX, all of that is not going to change. At least to begin with, what we think is rails like this provide settlements. So the way you settle FX, the way you can settle atomically PVP without settlement risk for currencies not covered by the likes of CLS, that's what shared ledger platforms, multi-currency platforms can bring, in my view.
Thanks, Naveen. We have a few more questions, but they are relating very much to CBDCs as a public good. So I think we will actually have that answered as part of the next session. So I will now just hand over back to Gabriel, and yeah, he will just bring us through to the next session.
Sure. Thank you very much, Vicky. And thank you, gentlemen. Thank you, my lady, as well. Everybody, applause. Hear that. You're not hearing it. Can you hear? I don't know whether you can hear it on Zoom, everybody, but there's actually live people applauding for the session and everything like that. I think that was a pretty good session. It's a very good way to kick it off. I think one very interesting comment I would definitely say is that when it comes to adoption of digital currencies, it's definitely something that can evolve very, very quickly. And if Wiki were to do the same panel again, in a month's time, we could have the same people, and I think the conversation will be very, very different because space just evolves extremely quickly. Before I hand it over to the next panel, a couple of announcements very, very quickly. First one is for everybody who's watching this online, just to let you know, Green Shoot series is a weekly discussion which we're having. Next week, we're taking a little bit, we're taking things a little bit in a different direction. We're still going to be staying in FinTech, obviously, but it's going to be talking about the future of work and the future of hiring in the FinTech space. I think hiring is always a very interesting topic. Everybody has different perspectives, different practices. And most importantly, I think, not to open that can of worms a little bit too much, but, what's the future of work really look like? How many of us actually wants to be in shorts or shirts and everything like that? Nobody knows. I know what I like. Anyway, without further ado, I would also like to introduce the next panel, which is actually behind me. Very, very shortly, you'll be able to see them. And we're talking about CBDCs and basically the future of public good and everything. So we're going to have Sopnendu, we're going to have Paula, who's somewhere online, who'll be joining us, and of course, moderated by Andrew McCormack, who is the center head of BIS here in Singapore. Gentlemen, Paula, hopefully, thank you very much.
Thank you, Gabriel. All right, thanks everybody. I'm Andrew McCormack, and it's an absolute pleasure to be here with Paula Hunter, the Executive Director of the Mojaloop Foundation, and the one and only Sopnendu Mohanty,
Thanks for
Chief
having us.
FinTech Officer of the MES. I'd also like to say thanks to the previous panelists, Wiki, Laura, Naveen, and Vinay. I think that was a fantastic discussion and certainly enlightened us on the journey of digital currencies over the past 6 years here in Singapore and kind of where we are moving from research to live production. One thing I do still hear from time to time is that CBDCs are still perceived in many places to be a solution looking for a problem. And so Paula, Sopnendu, and I are going to attempt to unpack the digital currency opportunity and from a variety of perspectives, and in particular also try to include the perspective of financial inclusion in this discussion. So I'll start by asking, what are the gaps, right? What are the gaps that you perceive in digital finance, in particular in payments and financial inclusion today that CBDCs might be uniquely capable of solving? And I'll start with you, Paula.
Thank you. Thank you for having me. I so wish I could be in the room with you, but happy to participate this way as well. So the Mojaloop Foundation's mission has really been to address the unbanked and underserved in the financial sector. So providing access to the digital financial system is critically important for us. And at the same time, there's a growing need for improvements in the distribution of aid and cross-border payments. All of these things can be improved through the issuance of CBDC, but there's some fundamental infrastructure issues that we have to address to bring those unbanked into the digital marketplace. Cost, latency, and interoperability are challenges that we want to address. The first two having a significant impact on an individual's willingness to shift from cash to digital currencies. So right now, in order to participate in the digital sector, cost is a significant barrier. I think in the last panel discussion, it was noted that it's expensive to be poor. And certainly when you're trying to transact money transfers cross-border or even within country, each transaction has a cost associated with it that is prohibitive today. We want to address that. Secondly, there's the issue of latency, lags in settlement that are both disruptive on the sending and receiving end. Again, a barrier to acceptance of and getting away from cash. So what we want to make sure is that real-time payments are in place, that individuals become more comfortable with this model, knowing that whether they're paying their utilities or their rent or accepting money from a family member, that those settlements are very quick. And again, these are barriers to them reducing their dependency on cash. And then finally, what we want to do is address interoperability. Right now, there are a lot of choices in the marketplace. Merchants, I've seen pictures of merchants with 4, 5, 10 terminals to be able to accept payments from various providers. What we want to do is ensure that there's interoperability to reduce the complexity of accepting digital payments, and also, again, to address that cost factor. But we also want to make sure that from an interoperability standpoint, that if an individual wants to send money, domestically, cross-border, that there's compatibility across the service providers, that they don't have to worry about who on the receiving end, who they're using as their financial provider or as the transaction enabler. So those three issues really are underpinnings of being able to go to the next level and implement CBDCs at a national and cross-border manner.
Fantastic. Sopnendu, what do you want to add there?
Well, Paula was kind of articulating on the retail domestic payment side. I think let me unpack for you a real issue we are facing today. As you know, recently we went live with Thailand, connecting our domestic payment system. And it took us 3 years with hundreds of meetings, try to solve this problem between two countries, sorting out policy issues, AML checks, online sanction checks to move money from Singapore to Thailand. The outcome of that was that we reduced the cost of transfer from 15% to 3%, 3 to 5%. But for many countries, for sending $100 and you pay $3 is a lot of money, especially on the receiving side. I can actually leave on that money with $2 rice and dried fish for a week comfortably. So how do we get that cost of transfer to sub-dollar? To me, that's the problem we are trying to solve. I'll borrow from Naveen's point. He was talking of exposing or bringing out the commercial bank ledger to outside. Can central bank bring that ledger outside? And hopefully, the work you're doing in Project Dunbar, multi-CBDC, can this ledger be shared by multiple countries? And we can remove that settlement complexity we have with layers of correspondent bank trying to reconcile debit, credit. If we can bring that shared ledger, put together a wholesale CBDC, my guess is that we can truly achieve the sub-dollar cost of transfer for cross-border transfers. I think if you can solve that, that's a real problem. And wholesale CBDC in this example is not a problem looking for a solution. A solution desperately looking for, a problem desperately looking for a CBDC to get there.
Gotcha. So, I mean, that resonates very strongly. But one thing we want to also acknowledge, and I think, Paula, you brought this up, is payments infrastructures are largely owned and operated by commercial sector players, right? Yes. And that's under the auspices or governance of strong public sector oversight and competition around safety and soundness. And I think that has helped accelerate, for example, the journey of faster payment systems development around the world as of late. We've also seen even non-bank commercial entities, certainly innovating and driving down the cost of payments and having a dramatic impact on financial inclusion in certainly emerging markets, right? So considering this delicate balance between public and commercial interests, how does a CBDC, what is it possible that a CBDC could be offered in such a way to achieve both the public policy goals while also being a platform for innovation in the commercial sector and sufficiently interoperable with commercially driven payment systems that exist even today?
I think your question is, again, back to the retail CBDC on a domestic faster payment network. Well, place like Singapore, we have solved the problem of transferring money as efficiently we can now with 3 clicks at a cost for consumers zero. Of course, banks are still paying a little money behind. It's not 100% zero. Given banks are in this audience, I can't say zero for the banks. I still get complaint from banks, we're still paying that much money for a transfer. But consumer perspective, it is zero cost, moving money from A account to B account. But that's Singapore. I don't think many countries can afford to put a domestic payment system which will achieve that efficiency. There's a cost element and there's a complexity of this whole putting an infrastructure like that. So could be an argument for smaller country or countries who can't afford a faster payment system that a retail CBDC can leapfrog almost your two phones are holding central bank issued or domestic or commercial bank issued retail CBDC, and that can be a replacement of a retail payment system or a merchant acceptance. So there is a value for some market based on where they are, and if they can afford to leapfrog the traditional faster payment system to build a system where a commercially issued retail CBDC or a central bank, I'm not a big fan of central bank issuing retail CBDC, there are other implications, but at least a commercial bank issued RCBDC can leapfrog that gap they have today on the faster payment, at least the domestic payment side.
Paula, do you have anything to add to that?
Yeah, a couple of thoughts. First of all, I mean, the commercial sector obviously has had a very important role to play in delivering digital payments, but they have not been able to meet the needs of the unbanked and underserved. Otherwise, we wouldn't be talking about financial inclusion. There's a gap, and we need to close that gap. And I think two ways that we can help accelerate adoption of digital payments in many forms. One is to take a standards approach, something that many financial institutions and technology companies have embraced, historically. And secondly, what we've taken is an open source development model approach to deliver this type of platform, to ensure that there's no vendor lock-in, that there's open participation in the development of the platform, enhancement and maintenance of the code. So it's a much more open and inclusive way of developing an interoperable platform. But speaking of interoperability, one of the things that we recently did was we participated in the BIS Innovation and SWIFT sponsored hackathon for ISO 20022. And what we were able to demonstrate is that it's possible to connect traditional market participants with many different account holding institutions in the developing world's financial ecosystem. So being able to use a standard such as the ISO 20022, what we're able to do is to allow people to exchange funds safely, quickly, securely, even cross-border, which is a huge stepping stone for us. It paves the way, again, for that adoption and deployment of CBDCs. I agree with Sopnendu that it would be great to leapfrog and just set aside all the legacy challenges that are predominant in existing systems. But I think we need to coexist, and so interoperability and standards is the way to do that.
I think just to add what Paula said, with all the work Mojaloop is doing to bring down the cost of payment infrastructure, still the settlement infrastructure still will be a traditional one. If RCBDC can design a settlement system within domestic environment to make it efficient, there is a benefit of deploying an efficient solution. But I don't want to miss other use case, which I was speaking to United Nations Refugee Commissioner. I think there's a huge use case for direct benefit transfer, especially for refugees during crisis. When you issue a certain amount of money, I think there is a value of issuing a digitized version of cash in that condition. So there is this evolving use case, which is very compelling when it comes to retail CBDC, especially on those crisis conditions.
Right. So one thing I want to pick up on is the MAS has actually recently announced a commitment to the Mojaloop Foundation, right? So I'd really like to kind of understand what that means for Mojaloop in particular, and obviously I'll get your perspective as well, Sopnendu, but Paula, why don't you kick it off in terms of what it means to have an entity like the MAS now officially kind of participating at the board level and contributing to the Mojaloop Foundation?
Sure. So the Mojaloop open source code base has been developed over the last 4 years with a real focus on building a foundational reference design for real-time payments. But we can't forget the long range. And as you're hearing today, you know, Sopnendu is the visionary, and his team at MAS is the visionary for our long-range strategy. So while we're really focused right now on implementing Mojaloop as it's been developed today, we need to think about the evolution of the code base and what we need to address in the future. MAS is well known as an innovator in the regulatory space. And what they've done is look at Mojaloop and have shared with us ideas on how we can extend and enhance Mojaloop to provide more functionality and broader reach. Combined with their innovation and their strategic thinking, they also have tremendous amount of experience with open source development models, as exemplified in Project Ubin. They've collaborated across philanthropic, technology, and financial sectors. So they bring tremendous market perspective, but also perspective on what our architecture and evolution of our architecture should be over the long term. So again, having their insight and their strategic thinking allows our developers to continue to focus on what they're doing today on real-time payments, but also build out the future with insights from MAS and other parties.
Well, just to use this opportunity, yesterday we announced a CBDC sandbox on our API exchange platform. Why that's unique, and I want to use this platform to let everybody know, because we're going to open up that CBDC sandbox. We'll publish all the APIs, whether from MasterCard or from R3 or from Mojaloop, and a core banking software, 70 APIs. You can actually get into the platform, whether you are from Africa or Latin America or ASEAN market, can expose yourself to start building application out of the sandbox using all these APIs. In fact, we'll publish the API. You can issue your own CBDC if you want to, and start playing with the future application. I think that infrastructure will single-handedly change the awareness and the game we are now into in the whole CBDC. So I strongly encourage everyone who is watching this event, by August, can get into this environment and try all your dreams and fantasy on CBDC, because we'll get all the APIs and the data set you need to build those future applications. That's how we are going to collaborate with Mojaloop, and hopefully we'll get some great ideas.
I'm sure you will. That's great news as well.
By the way, we'll also take something from Dunbar also, so that we can stick in there a multi-CBDC.
See, we had our prep call like 2 days ago, and I'm already behind on all the things you're doing, Sopnendu. It's impossible to keep up. So we're going to wrap up. We've only got a couple minutes left, but I think I did want to also invoke the recent paper on foundational digital infrastructure, because we talked a lot about CBDC and payments, but obviously these things don't exist in isolation, right? So maybe quickly, remind the audience kind of what the other pillars are of this foundational digital infrastructure, and then Paula, give you the chance to maybe opine on what things like digital identity might mean from an emerging markets perspective as well. So maybe you can just kick it off.
Okay, so quick on for FDI. As we always say, there are 4 things we must have in a digital economy. You should have a trusted ID, an interoperable payment system, a trusted data exchange, and a clear consent system governed and managed by citizens. If you don't have this basic infrastructure, you don't have to talk about digital currency. So every country, before they embark on a production digital currency, digital economy, they must have this basic infrastructure. In fact, before this, I was debating on this whole smart contract. They're neither smart nor contract, because you need a business rule, so it doesn't make it smart. And you need it's not a legal contract. Ultimately resides on a trusted ID, so that the contracts can be exchanged. So you need a trusted ID, and you need a trusted payment system to make it work. So there is this fundamental need. We hope that as we move forward, other countries will take this specification we are building, and hopefully that becomes a norm for many countries, at least when the public planning is going around the fundamental infrastructure. With Mojaloop partnership, that will make this whole exercise much more easier for us.
Paula, anything you want to add to that?
Yeah, in a word, I think what these pieces of foundational infrastructure deliver is trust. Trust to the end user that they have safe access to the digital infrastructure, that their data is protected, and that their identity is validated. But the trust factor is important not just to the user, it's important to the banks, it's important to central banks, governments, everyone that's plugging into this system needs to know that the identity is authenticated, that there's transparency in who can use the data and how to access users' content. So I think all these foundational elements need to come together to provide adoption, to accelerate adoption, and trust has to be there across all the participants in the ecosystem to embrace these new infrastructures.
Great. Well, look, we are out of time. I can see Gabriel getting out the hook here, so we're probably going to get kicked off stage. But I do want to thank you, Paula, specifically from calling in from Boston, I believe, this morning. So much appreciated. Thank you to the live audience here as well, and I'll hand it back to you, Gabriel.
Thank you very much, Andrew. Thank you, Sop. And thank you, Paula, as well online. Well, ladies and gentlemen, for those of you watching us online right now, that brings an unfortunate end to today's session. You can join us again next week. I think it's the 23rd of June, 4 p.m. Please sign up. You'll definitely get a link for it if you're watching us live right now. And you will basically be talking about, we will be talking about the future of work and the future of hiring in the fintech space. For the live audience with me right now, thank you very much. We've still got one more small segment for you. We're going to have a bit of a live discussion and everything. But I'll put you guys on pause for now. And for everybody online, thank you very much. Really appreciate your time. Hope you've learned something. Follow us, find us, SG FinTech, all the social media handles. You can find us there. And last but not least, stay safe, take care, mask on, wherever you are in the world, especially in Singapore. Good evening, good night. And if you're in the US, good morning as well. Thank you very much, everybody, and have a good day.